Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, March 31st, 2009. The theme of today's session was a pullback in risk aversion and a retracement of the moves seen the last two sessions, especially in regards to yen crosses. Though shares were down in Tokyo, Europe saw an upbeat end to the last trading day of the first quarter. That sense of risk appetite helped the euro rally about 200 pips against the dollar, moving above yesterday's high to test the 1.3340 level. However, despite gains on Wall Street, the New York session saw today's rally cut down by about 1/2. The yen was pressured today as better stock performances in Europe and New York, along with further negative news from Japan that shows a deepening recession, weighed on the Japanese currency. The dollar-yen pair extended its rally seen in the second half of yesterday's session, surging to a new high near 99.35 in today's New York afternoon trading. That's the highest the dollar has been since the beginning of this month, when the pair stalled at resistance around the 99.70 level. Let's dive into the data from Japan. The country's unemployment rate jumped to 4.4% in February, undoing the drop in the rate seen in February. The rate climbs to a 3-year high, and the ratio of jobs available to each applicant tumbled by its biggest amount since 1974. Wages fell a sharper than expected 2.7% on the year in February, following a 1.3% decline in January. That is an indication of the pressure Japanese households face, not only as unemployment increases, but firms are cutting back hours and pay for those that still do have jobs. Japanese household spending fell 3.5% in February compared to a year ago, better than expectations and a smaller decline compared to January. It still marks the 12th straight month that this indicator has declined, as Japanese households have reacted to the country's recession by limiting their purchases. The manufacturing sector remains deeply entrenched in negative territory, posting a 33.8. It was, however, the second straight month that the index did improve. Another yen pair, the Aussie yen, surged today as carry trade picked up. From a low yesterday near 65, the Aussie climbed 400 pips, erasing its losses the past two sessions. This was one of the larger moves today, but other high yielders like the Kiwi and Loonie and also the euro and pound strengthened versus the yen. German unemployment rose more than expected in March, with 69,000 workers losing their jobs to put the total number of people out of work to 3.4 million. The seasonally adjusted unemployment rate rose to 8.1%. German unemployment has been increasing since November of last year and has put pressure on the European Central Bank to try and alleviate the recession through further interest rate cuts. European consumer prices slowed to an annual pace of 0.6%, preliminary data for the month of March showed. That is a record low for the index that goes back to 1996 and a rather modest decline from the 1.2% seen in February. The data does give the ECB a new paradigm, and that concerns over deflation will give the ECB more leeway to continue lowering interest rates and may overpower the reluctance to move to quantitative easing as the UK and US have done. In the UK, consumer confidence, though remaining in negative territory, showed modest improvement, increasing 5 points to -30 for the March period. That is the highest level since May of last year, and consumers are benefiting from lower interest rates and lower prices. The pound-dollar pair broke its downtrend of 4 sessions, extending its late gains from yesterday to rise to the 1.4350 level in late New York trading. Support for the pair was established at the 1.41 level, from which the pair has retraced 38.2% of the recent 4-session decline. The better-than-expected consumer confidence data added to the stronger performance in UK equities to boost the pound's fortunes today. In the US, house prices in major metropolitan areas continued to decline in January. The 20-city index showed prices down 19% on the year, and the 10-city index is off 19.4%. Both are fresh record lows and imply that stabilization in terms of housing prices in the housing sector is not yet being achieved. March's Consumer Confidence Index in the U.S. remained close to its level seen in February, posting a reading of 26. Both the present situation and the future expectations sub-indexes increased, though they are still far from their levels in even January. Consumers remain concerned about the weak state of the economy, along with increasing unemployment, and expect weak business conditions going forward. In a second week release, the Chicago PMI declined to 31.4 in March, the worst reading since July of 1980. That result undershot forecasts of a small increase or for the index to remain near its February levels. In Canada, real GDP declined 0.7% in January, following decreases of 1% in December and 0.7% in November. The main negative contributors were output of manufacturing, especially of motor vehicles, as well as wholesale trade and construction. In the second release from Canada, February saw the Industrial Product Price Index rise 0.4% due to both the depreciation of the Canadian dollar against the US dollar and increases in the prices for precious metals and petroleum products. The Raw Materials Price Index advanced 1.7% compared with January, pushed up by rising crude oil prices. The US dollar-Canadian dollar pair, after a strong surge yesterday that brought it to the 1.2650 level, paired some of that move in overnight trading on the back of increased risk appetite. The retraction amounted to 38.2% of the move seen in the previous two sessions, finding support at the 1.25 level. From there, the weak Canadian GDP news sent the pair back up to test resistance once again in a 150 pip rally. Tonight, Japan will post its Tankan survey, a quarterly view of business confidence among manufacturers and services sectors. If forecasts prove correct, it could show the sentiment declining at the fastest pace ever. Also tonight, Australia will release data on manufacturing, building approvals, and retail sales. Overnight, Germany will post its retail sales, and Switzerland releases its SVME PMI. Continuing overnight, the UK will release data on housing prices, manufacturing, and housing equity withdrawal. The Eurozone, meanwhile, reveals its unemployment rate. Tomorrow, the US has several important releases, including the ISM Manufacturing Index, pending home sales, and the ADP employment change. And that wraps up today's Forex recap. Thank you for joining us here at CMSFX.com, and happy trading.